And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Cloudy, gloomy outside, and it is a bit of a Monday. And we're coming into what Janet Yellen says, time is running out for the balanced budget debate, whatever you want to call it. We'll cover some of the economic data that's going to come out this week, the major levels to be keeping an eye upon for Bitcoin, and some of the underlying market dynamics, including the dollar, open interest, which I can start us out here. Open interest currently at 8.1 billion, so coming down a little bit. The leverage ratio also coming down, and funding rates are slightly positive, so you're paying to go long. And the fear and greed index coming in neutral. Overall, I think President Biden came back from Hiroshima and said he expects the relationship to thaw with the U.S., the U.S.-China relationship to thaw, whatever that means. And immediately after, China ordered its infrastructure companies to halt buying chips, U.S. chips from Micron. The FOMC meeting minutes will be released on Wednesday afternoon, and you're going to have plenty of Fed talks today. What else is going on? Goldman Sachs economists predict the Treasury cash levels will drop below $30 billion minimum to meet the obligations by June 8th or 9th. As of Thursday, cash balance is $57 billion. So chicken and mouse, or fox and chicken between the Democrats. It's all a big game. And I guess I want to start out with the dollar being the harbinger of kind of death and despair here, as dollar is continuing to pick itself up. Volatility is still increasing off the lows on the 2-day and the daily time frame, and it does seemingly beg to want to take a run up to that 618 fib, which is coming in right at 103.98. And so we play lower, higher, not at that level. If we can bust through there, we might even head up all the way up to 105. Remember, volatility was absolutely compressed on the daily time frame. We said this expansion would get us a pretty good move in either direction, and we expected the move to go in the direction of the stochastic. The 2-day is still up, and the 3-day is still up and expanding from the lowest level since going back, January of 2022, so about a year and a half ago. So if the dollar is bullish, generally you'd expect risk assets to be coming down. However, NASDAQ putting in a pretty momentous rally, and it does look like it wants to head up to the 618. We broke the 0.5. Volatility is expanding off the low, momentum still to the upside, and we'll be crossing back down, though. And you know that Bank of America, or one of the guys, JP Morgan, no, it wasn't. I think it was Bank of America. The guy said sell at 4,200 on the S&P. So you know he's got to be wrong. So probably has another leg left in it. Overall, the week did close bullish, pretty bullish for NASDAQ. We are in the critical zone here, still crossed up. So this thing, I think, is going to turn around in a heartbeat. And the general narrative that I learned about over the weekend is that there's something called the wall. What is it called? The wall of rule. The wall of rule framework. And to put it in a nutshell, and I might do a deeper dive on it later today, but basically says that the liquidity in the market the Fed wants is 10% of GDP. So take that for what it is. So that's the amount of dollars they want in circulation so that people can buy stuff, right? The liquidity, 10% of GDP, which I think would be $2.7 trillion. And we are currently over $3 trillion. So they need, I think it's like $3.2, $3.4 trillion of liquidity still in the market. The Fed is still tightening. They're raising rates. They are, the Fed's raising rates, and they're unloading their balance sheet, little by little. So sucking liquidity out of the market. And something opposite to what everybody thinks is that by the Fed or by them raising the debt ceiling, that it's going to be like immediately inflationary, which is probably incorrect. The fact is that when they raise the debt ceiling, they're going to sell more bonds. So if the U.S. Treasury sells more bonds at a higher rate, at a higher coupon, I don't know what it's going to be. They sell more bonds. What happens? People have to buy those bonds. So instead of the banks putting the money in the stock market, they're going to buy bonds. I don't know why it works this way, but money, if the Fed sells bonds, the liquidity is going to go there. And so generally speaking, over the next 2 months, we expect liquidity to go down, for inflation to go down, and for generally global liquidity to come down. And that is not positive for Bitcoin. Additionally, Jump and Jane Street, two of the biggest market makers in the cryptocurrency space, have now left and have gotten out of the market. So take that for what it's worth, but let's get into the charts. Let's get into some Bitcoin analyses here. And Bitcoin did have a chance to close green yesterday on the weekly, but it did not. We had a red doji candle. That is a signal of indecision on relatively low volume. And so declining volatility, mean reversion bounce. So when volatility expanded, we went to the upside. Now, as we are beginning to contract, you would expect, well, sideways is good. And at the very least, a test of 25,300. I do think that that is still in the cards. And that's based off of the bearish divergence on the 3-day and the 4-day time frame. Again, noting that you have 1, 2, 3 drives, which typically gives you a shot down to that green 55, which is coming in at 25,300. Now it is going up day by day. Additionally, we talked about the 3-day volatility getting above 25% to initiate the next 30% move. And it looks like it's doing what the 2-day was doing a few, kind of a weeks ago. It got the initial move, came back down. Now 2-day volatility is expanding, and we're currently crossed to the upside, but we'll cross back down below 26.6. Additionally, the daily time frame, I did want to note, is kind of hanging below as well. You got the silver cross to the downside here. So this thing needs to uncross itself very quickly. Otherwise, just a tick above this spike high at 27,678, very likely, I would say, gets this move back up to 29,000, somewhere in that region. Because that's kind of what happens. The price comes in, it bundles up around, all the moving averages bundle up together, and then you get an explosive move to the upside or the downside. So and daily volatility has had a complete reset, not on CMEs, but on spot price action, almost a complete reset. So we're back down to the low levels below 10%. And the expansion off the daily, which today the daily below 26,724. Momentum will cross back to the downside, and we have a trend line coming in here on the stochastics or any bearish divergence. No, not at the moment, but yesterday's kind of bearish engulfing candle, this is bearish. I mean, on a Sunday afternoon, we were rallying up and just got straight up slammed back down, and we did produce another slightly lower low on a candle closing basis and on a wick basis compared to that low. Bearish engulfing candle implies downside continuation. And we are below this pivot. And we did say this was the pivot, a few weeks ago. We said, look, any kind of a daily closure below there very likely does get you that next move down to 25,000. But, there is still hopium for the bulls, because this thing, momentum still to the upside on the daily and on the 2-day. Volatility is expanding, and you'd expect the price to go in the direction of the stochastic. Now we do have a chance to cross down. We're at 26.8 today. Also a bit of a almost on the 2-day time frame. You have that golden cross right there. So Bitcoin is right in the middle of the sand. He's in the middle of the line, in the middle of the sand. And it's kind of a very contentious moment here before the debt ceiling debate. So what are they going to do? I mean, does McCarthy throw it in Biden's face and make the market drop? Or are they going to come to some kind of an agreement? Most analysts say that the Republicans are just going to roll over and give up, they're just going to raise the debt ceiling. Of course, they're going to raise the debt ceiling, but who is going to concede more, right? Republicans want to have more on military defense spending. Democrats want to have more on, I'm not even going to say. I'm not even going to say. So interesting enough, today's daily closure very likely does set in motion. And, again, the 3-day and the 4-day, the more powerful time frames, if we see momentum flip back up on the 3-day and the 4-day, well, that'll bleed into the 5-day. But the 5-day and the weekly, now we are completely out of the critical zone. And, well, that would be a strike of bullish divergence once we do flip back around. Once we do flip back around, what am I talking about? Stochastic bullish divergence. So this low right here, right? This low, now, as long as we put in a higher low above that low, right? Then you will have higher lows in price and a lower low in stochastic, which would be bullish divergence on a 5-day time frame. Just food for thought there. It is not apparent on the RSI though, unless you go back to this pivot right here. So we should keep an eye on this. If we do confirm, no, that does not give us the 2 drives, excuse me. So, getting kicked out of the bullish control zone, extremely low volatility, losing the PMARP. And I'm just going to throw on the good old Gaussian channel here for a moment. And I know the last thing people want to hear is some kind of a bearish bias. The last thing people want to hear is anything bearish. But, the buying opportunity is when the price goes down. You want to sell high, buy low. And as we shave off, another 20% downside move, that is the opportunity. So congratulations if you got out up there. And if you could buy a little bit lower, you don't have to catch it perfect. We're probably going to front run that signal and try and get in somewhere around there. Even though Bitcoin has the potential to go down to $20,000, you can't time these things perfectly. And that's it for today, guys. I think I've spoken my head off. I hope you enjoyed something. And if you did, make sure you put a thumbs up on the YouTube channel. Take care and have a blessed day.